Hey everyone, and welcome back to the Noob Selling Options channel. I am so thrilled you're tuning in for today's explainer. Look, let's just address the elephant in the room right off the bat, okay? There is a lot of red, a lot of panic, and quite frankly, a whole lot of pain out there in the crypto markets right now. It's rough, but here on this channel, we don't run from that pain. We actually lean right into it to build massive long-term wealth. And today, I'm going to show you exactly how we do that. $10,688.74. I want you to take a really good look at that number because this isn't some theoretical paper trading exercise, and it definitely isn't some online guru's wild projection for next year. No, this is the exact hard dollar amount that I deployed into crypto ETFs this week alone. Does the market hurt right now? Yes, absolutely. But dropping this kind of cash immediately proves our high conviction strategy. When the market bleeds, guys, we go shopping. All right, let's pull out the actual receipts so you can see where this capital started to flow. While the average retail investor out there is freaking out and just mashing the sell button, we calmly stepped in. We snapped up 150 shares of BSL, that's the Bitwise Solana staking ETF, and another 100 shares of IBIT, the iShares Bitcoin Trust. This is us actively accumulating that foundational spot exposure to the biggest macro fixtures in all of digital assets. But we didn't just stop at the safe foundational stuff, right? We got a bit aggressive. We secured 30 shares of SALT, stacked a massive 230 shares of the 2x Bitcoin ETF BITU, and then we loaded up on 500 shares of the 2x MicroStrategy ETF MSTU. We are willingly, happily even, buying into highly volatile leveraged instruments while they are sitting at a massive discount. Why on earth would we do that? Simple. Because we are setting ourselves up for a massive wealth multiplier the second this trend reverses. So when you pull the whole shebang together, it gives us this highly focused, high-conviction battle plan. Across these 5 different ETFs, we accumulated exactly 1,160 shares this week, and the total capital deployed perfectly hits that nearly 10.7K mark. We are purposefully pushing into this mix of safe, underlying spot exposure on one side and leverage volatility on the other, across both Bitcoin and Solana. We're setting the stage for what's coming. Now, if we look at a pie chart of our entry here, it perfectly illustrates the deliberate balance of our entire portfolio strategy. We aren't just blindly throwing cash at the highest risk stuff we can find. Actually, 58.5% of the capital is anchored safely in non-leveraged ETFs. That gives us the solid spot exposure we need to weather the current storm. But we are maintaining a highly aggressive 41.5% stance in those 2x leveraged instruments. That specific ratio, that is the absolute engine of our strategy. Protection on the downside, but completely explosive capability on the upside. To really put that into perspective, let's break down the capital split. We explicitly deployed over $4,400 into leveraged daily volatility right in the middle of a massive drawdown. Now, fun fact for you, historically, trying to catch a falling knife using leverage is exactly what blows up a huge percentage of retail trading accounts. To the uninitiated, this sounds absolutely crazy, but we are doing it on purpose, and it requires a very specific psychological framework to pull off. So let's talk about why this exact setup is the secret to maximizing your eventual payoff. It all boils down to the core conviction of the No Selling Options channel, which is simply this. Wealth is built on the way down. Look, I totally get it. The psychological toll of a red market is heavy. It physically hurts to log in and watch your portfolio value drop day after day. But the absolute best time to deploy your capital is precisely when risk feels the highest to the average investor out there. You literally have to flip your perspective upside down. You aren't losing money on the way down. You are buying future wealth at a ridiculously steep discount. Try to visualize the current market not as a scary falling knife, but as a giant, compressed spring. Every single time the price of fundamentally sound assets, like Bitcoin or Solana, drops, that spring is just being shoved down further and further. We are operating on the ultimate recovery thesis here. We have 100% conviction that these assets are permanent macro fixtures. So these major drawdowns, they aren't capital destruction. They are simply the gathering of immense potential energy. And the harder you compress that spring, the more violently it's going to snap back up. Now, I know a lot of people will immediately ask, okay, but what if you buy and it just keeps dropping? What if you're just way too early? Well, let's reframe that right now. In our framework, being early is not a failure. It's actually a mandatory phase of building a massive position. We fully accept that perfectly timing the exact bottom is just a statistical myth. Instead, we rely entirely on mathematical averaging. Every single time we buy a new tranche as the market drops, we drag our average entry price down with it. We are literally lowering the gravity of our break-even point. This is pure math, guys, not luck. To truly grasp how powerful this is, you just have to look at the math of the payoff. If you only average down on a standard spot asset, your eventual recovery is just linear. It's straightforward. But when you aggressively average down on a 2x leveraged ETF, you're accumulating twice as many shares for the exact same price during that dip. So when the market finally recovers, that massive share count combined with the 2x daily compounding acts like absolute rocket fuel. It doesn't just recover, it becomes a massive wealth multiplier. We actually like to call this the springboard effect, because your average cost base has been so aggressively dragged down with every single buy you made during the pain, a pretty magical thing happens when the market finally shifts back to bullish. Your leveraged position clears its break-even point incredibly fast. The market doesn't even need to return anywhere near its previous all-time highs for your portfolio to become highly profitable. You just need a solid shift in momentum, and boom, you springboard straight into the green. But here's the catch. You cannot execute this springboard effect blindly. If you go all in too early, you're going to run out of cash before the bottom is actually in, and then you're just stuck. That's exactly why we follow a tactical survival playbook. It comes down to two mandatory steps: strict tranche budgeting and protecting the goal. You absolutely have to have a system to make sure you don't run out of fuel before the market finally turns rosy again. Let's break down step 1, strict tranche budgeting. Because we fully expect to be early, we have to treat our capital exactly like ammunition. You have to ration it. We divide our total target allocation into 3 or maybe 4 distinct tranches. And here is the absolute secret to this whole thing. You space those buys out by vertical percentage drops, absolutely not by time. You don't just blindly buy every Friday. No, you buy when the asset drops another 10% or 15%. This guarantees you can comfortably keep buying no matter how deep the discount gets. And finally, step 2, protecting the goal. The entire purpose of enduring all this drawdown and meticulously averaging down is to eventually catch that explosive expansion phase. Let me be clear about my conviction to focus on buying right now. Delayed gratification is always the case for the longer-term investor. Always. It is the ultimate key. You have to keep your eyes on the prize and just calmly endure the psychological pain right now. That way, when market euphoria inevitably returns and everyone else is desperately rushing back in, you are already sitting there, perfectly positioned with a massive average down bag, ready to reap the rewards. So I'm going to leave you with this question to ponder today. Do you actually have the patience to delay gratification and wait for the springboard? Because honestly, that is exactly what separates the winners from the losers in this market. If you found today's explainer valuable and you want to keep following along with our high-conviction, radically transparent strategy, please do me a favor and hit that like button. And make sure you subscribe to the Noob Selling Options channel. We have a whole lot more wealth to build together. Thanks so much for joining me today, and I'll catch you in the next one.